As a financial institution operating in a volatile and dynamic environment, sound, proactive risk management processes are essential to LB Finance's long-term success. Our core business lies in protecting the interests of our depositors while delivering adequate risk-adjusted returns to our investors. Therefore, LB Finance's corporate strategy remains closely aligned with our risk strategy. We approach risk differently, focusing more on steering risk than on preventing or avoiding it. During the year, many changes to the organization's risk profile were seen, mainly due to the pandemic and the declining economic conditions in the country. The credit quality of the entire industry was affected, with the non-performing loan ratio increasing to reach double digits. We are proud to say that even in a turbulent and challenging environment, the strength of LB Finance's credit risk management practices helped us to keep the credit risk to far below industry levels. One key focus area of the IRMC was to build an anti-fraud culture within the organization, where a formal mechanism for fraud risk assessment was introduced and included into the operational risk management process of the company. We also established a new branch risk assessment methodology to help identify branches with the highest operational risk. Further, we strengthened certain policy frameworks related to credit risk management, operational risk management, and the stress testing framework. During the year under review, LB Finance's risk appetite statement was further strengthened by introducing risk limits in relation to credit concentration, related party transactions, operational risk, and investment limits. Another new development was the embedding of the Myanmar subsidiary, LB Microfinance Myanmar Company Limited, to the enterprise risk management process of the company, extending the risks to include more qualitative risk management practices, in addition to the financial risk management monitoring and reporting. The company also introduced a credit risk scoring model using artificial intelligence to help us understand customer demographics and set forth different credit risk management strategies for each identified group. During the year, understanding the importance of assessment of risk in relation to capital, we voluntarily initiated the internal capital adequacy assessment process, which is commonly known as ICAP. This requirement comes under the Basel III Accord, and it's a regulatory requirement only for banks and not for NBFIs. With the highest levels of cyber and IT-related risks, the IRMC also began to assess IT risks via a separate reporting mechanism, and we began to review it more closely. It's noteworthy to mention that the new corporate governance direction issued by the central bank in late December 2021 specified that IRMC meetings of finance companies with over a 20 billion asset base to take place on a bi-monthly basis instead of a quarterly basis. While the deadline for compliance is 2024, LB Finance remained proactive and began adhering to the requirement from January 2022. Today, as we look towards a future of uncertainty, we remain confident in sustaining our business by carefully responding to existing risks while introducing environmental, social, and governance risks to our risk appetite statement to provide a more holistic perspective across the board.